Buy, sell or rent your property with Century 21 and you could win a brand new 2-bedroom apartment on the Sunshine Coast in Queensland. Visit c21win.com.au for your chance to win.
Hello and welcome to Your Property Empire. I'm James Daganixon, filling in for Chris Gray. On the show this evening, what are the key factors to look for when buying or investing in units as opposed to houses? Have the tightened lending policies for foreigners had the effect they wanted, or is there still plenty of foreigners buying in Australia? Will the value of real estate agents diminish as more disruptive businesses enter the market, offering flat fees when selling your property? Recent CoreLogic auction data shows that the number of listings is significantly lower than this time last year. So what effect is this having on market conditions? Well, joining me tonight to give their opinions, Charles Tarbey, Chairman and owner of Century 21 Australasia, and Jason Roach, Principal of Century 21 Linfield. Gents, a pleasure to have you on the program.
Thank you very much.
What do you reckon? Is it?
There's so many things going on, and there are so many different marketplaces. We've got, James, it's hard to pinpoint any one thing in any one market. That's the biggest issue. And Jason's area, they have massive shortage of stock. You go in other parts of the country, they have an oversupply of stock. So
has it always been like that? I mean, it just seems we focus intently on it the past few years, but has it always been like that? There's
always been lots of different marketplaces, but it's the distance between the two now is far greater than it's ever been, and it's generally because of the shortage of stock in the areas where people desperately want to buy. And there's an oversupply in some areas where people can't sell because they have, in some cases, negative equity in their property, so the bank's not even letting them sell.
Linfield and Gordon, I imagine pretty strong sort of markets at the moment. Why? I mean, if there's a big shortage of stock available, why is it? What do you think generally are the characteristics of these very strong suburbs?
Yeah, thanks, James. Really strong demand still coming from Chinese investors. And people probably from China that have joined Australia, come to Australia in the last 10 or so years.
Oh, right, that's still going?
Absolutely, still very strong. Great schools, public and private, infrastructure such as transport, proximity to the city, safe. Whilst house prices have been rising again, we've seen it's the growth starting to wind up again, a bit like it did last winter, 2016. We're not seeing the supply come on, which is also exacerbating a little bit of price growth.
Is that surprising? I imagine if people own property around that sort of that North Shore area and see prices, or anywhere that's in strong demand, see that those sort of pricing outcomes, why wouldn't they be looking to sell?
Yeah, good question. I guess they're happy to sell into a strong market, but they've also got to buy into that market as well. So they've got nowhere to go.
Unless you're downsizing, and it's absolutely sensational time. If they're going to downsize in some regional areas or north of the border, those things, this is absolutely the time for people to downsize right now.
And do you think, is this the status quo for some time? There's sort of, particularly in those stronger markets, a lack of supply, or do you see that changing in the months ahead?
Yeah, I don't see it changing very much at all. It's just one of those issues where the demand is so strong, particularly in certain capital cities, and I just can't see it changing at all.
Again, I mean, what do you see as the key characteristics in that drive, I suppose, those outperforming markets?
What's happened is the interest rate reductions went well beyond what everybody expected. So we probably had 3 more drops in interest rate than I expected that we would have. I think the market had reached a peak going back a year and a bit ago, and everybody thought, OK, it's settling down now. And then the rate reduction kicked in and people thought, oh, I can get out and borrow more, which they did. And instead of using the interest rate reduction to reduce debt, a lot of people went and extended themselves. And that's a bit of a concern. The interest rates were 10% and they went up to 11%. It's an incremental increase. But if they're 4 and they go up 5, which is only a 20 to 25% increase, and a lot of people don't recognise the fact that their home repayments could jump up 20 to 30% in a very short space of time, and that's when the stock comes on the market and things change.
I mean, in the suburbs that you work in that North Shore area, people, I mean, you hear about people offering ridiculous amounts above generally the price guide. I mean, is that something that's being borne out because of that level of competition to get, in-demand areas with short supply?
Yeah, look, the preferred selling method is still auction, and that is bearing out outcomes. So in terms of higher price outcomes, it's a transparent, it's showing the competition. So the buyers feel like they're paying market price. So whilst the price might surprise some of us on the upside, they're happy because they're paying the market price, because they can see the other buyers at the auction doing the same thing that they're doing.
What about the other end of the spectrum? So much has been written and spoken about units, in particular the oversupply of units.
Yes.
How real is some of this commentary?
We started talking about this towards the end of last year as a concern, only because if the more restrictions are placed on investors, if more and more restrictions keep coming in, and APRA's been quite active in the last year and a half, it means that investors are going to be held back to some degree, and if they're going to be held back, there might be a situation where prices might come down slightly, and if they do, and the banks call for valuations before settlement of properties off the plan, which they have done in the past, and people's valuations are different than the contract price, they're going to have to come up with a difference. And that's the danger zone. It's always been the danger zone, and there's some 92,000 apartments, according to CoreLogic, coming on the market and being built over this coming year, which is really quite significant.
Are there areas in particular that you would see probably at most at risk when it comes to those?
The further away you get from the infrastructure, the more the danger in those areas, and that's the concern. In parts of Sydney or Melbourne, it's very strong, but I remember going back in Melbourne, and you go down to Docklands in Melbourne, that really struggled, because a lot of apartments went up overnight, and when they all seemed to hit the market at the same time, that caused some real problems there, and that's the concern.
So, Jason, what do you think people who, undeterred by this talk of an oversupply in units and so forth, who are keen to buy a unit as an investment, what should they be looking for to help them make the right choice?
So I think Charles hit the nail on the head. Infrastructure. Do your homework. Make sure you're not extending yourself on your mortgage too much. Make hay while the sun shines. So look at what your income profile looks like, but also look at the quality of the developer. What are the recent sales been in supporting sales close to the development, and take your time. There's always another one. That's what we say to people. There's always another one.
I imagine do you reckon that would be one of the hardest things, because people just see the market moving? They go,
I've got to get in. I've got to get in, and they do, and that's where the havoc is caused mostly. Now, Jason's seen it from a couple of sides of the fence. He was very senior banker with Macquarie and Westpac before we enticed him across the real estate. So when you hear him talk, I can still hear the banker coming out in parts of what you're saying there.
We need to take a quick break. Look, when we come back, we're going to be talking about house prices. Obviously, we had some CoreLogic data out a little bit earlier today that saw once again some increases, but again, not across the board. So we'll take a look at where those price increases are. We might talk a little bit about the RBA as well, because big rate decision tomorrow. Stay with us.
We know you've always worked hard for your money. Isn't it time your money worked hard for you? Invest with La Trobe Financial. Trusted by Australians for more than 60 years and judged Money Magazine's best mortgage fund 7 years in a row.
Ah, big night.
No, big day. The client's going to march down that path, decide he doesn't like these tyres after all. We'll have to load them back up, get across town to quote on the Stevens place, wrangle the Magnolias, wrangle Violet, pick up the new tiles, finish the design for the Walker Street job, then poke a night with the boys where I will clean up. And of course, clean up.
Big days start with Barocca.
Hi, I'm Amber Lawrence and I'm inviting you along to the Toyota Country Music Festival in Tamworth this January, with dedicated family zones, concerts for the kids, award-winning playgrounds and so much more. It doesn't get better than Tamworth in January. Families can spend 1, 2 or 10 days exploring the vibrant country music capital. So come along and have some fun with me in Tamworth from Friday 20 to Sunday 29 January. For more info, check out tcmf.com.au.
Why would humans leave Earth for Mars forever?
I'm allergic to the planet.
Nasonex Allergy targets multiple allergic responses. It gives more effective hay fever relief than antihistamine tablets. Enjoy Earth.
Our world moves ever faster, and wonders never stop. Help arise before disaster, and phones can save a crop. Mighty drills know when to dig before the markets do. Brilliant minds can make it big with smart advice to see them through. You can make the world your office. Know when packages arrive. Tailor what your network offers. Use machines to stay alive. You can keep track of your fleet, help your city run on time, do things better on the beat, protect yourself from cybercrime. For technology is wondrous. It can take you far and wide. It creates a future boundless, helps your business make bold strides. In global markets or down under, we'll be there to help you strive. And together, we'll do wonders. For together, we can thrive.
Toombul tumbles in the polls while the minor parties surge. Fairy tales for dogs and sharks fans. And don't you love the carry-on about Trump's tax? See you tonight.
This program is brought to you by Caltex, proudly Australian owned.
Welcome back to the program. My guest this evening, Charles Tarbey, Chairman and owner of Century 21 Australasia, and Jason Roach, Principal of Century 21 Linfield. More from the guys in just a second. Before we do a property market update, capital city dwelling values rising some 1% in September, taking the rise over the quarter to almost 3%. For more on the outlook for house prices and what's driving them, we spoke a little bit earlier with Cameron Kusher, Head of Research at CoreLogic.
It's becoming a little bit more broad-based, the growth in the housing market at the moment. On the flip side of that, you're obviously still seeing Darwin and Perth recording fairly significant declines in home values in those markets. So it does show that there's very different conditions across different capital cities.
Do you suspect in some of the bigger capital cities that growth maintains this sort of a level, or would you expect to see a continued sort of plateauing?
Our view still is that the rate of growth in Sydney and Melbourne will eventually begin to slow. It has ticked up a little bit over the last couple of months. It's not as strong as it was 12 months ago, but we do think affordability constraints and it's going to become more difficult for people to trade up in this market because of the growth we have seen, and we think that will lead to slower growth in those markets. That may not actually occur till sometime next year. On the other hand, Hobart and Canberra have been seeing quite strong annual rates of growth now for the last 4 or 5 months, and we think that will probably hold. Adelaide was probably a little bit surprising how strong the growth in that market has been over the last year. I don't necessarily think that will continue, especially as we move forward and see the closing down of the car manufacturing sector. That's probably going to at least have a bit of an impact on sentiment in Adelaide, and I think that might cause things to slow a little bit further there.
Hi Cameron, it's Nathan from Bailey Holst. When we look at stocks, we tend to look at volume-weighted approach like the VWAP to see is that a strength, like when you're getting a rise, are you getting it in strength, or is it because of low volume and less trading? Do you have that kind of view on the property market, especially in Melbourne and Sydney? Do you think on a volume-adjusted basis the price rises are going to be maintained?
I don't think so. I think what we're seeing at the moment is that volume's really falling in the market, both in terms of the actual transactions in the market, but also the amount of stock becoming available for sale on the market. There's obviously spring where we do tend to see quite a surge in the number of new listings, and whilst they are increasing, we haven't seen the same kind of surge as we've seen over the last couple of years. And I think, as I said earlier, I think a lot of that is related to the fact that for people that are in Sydney or Melbourne, a lot of them have already made that decision to move home over the last 4 or 5 years. And with your exit and entry costs, stamp duty and agent commission, it doesn't make sense to be doing that on a regular basis. And the other side of that, of course, is where prices are now trading up in this market. I think people are starting to weigh up the decision, do I actually go and buy that next home, or is it actually going to be cheaper for me in the long run to stay where I am, maybe do a renovation, sit here for another few years, maybe prices have come back a little bit by then, and then that's my opportunity to trade up in the market if I still feel like I want to do that.
So Cameron Kusher there speaking to us a little bit earlier from CoreLogic. Now, in terms of a couple of the major capital cities that people tend to focus on in Sydney and Melbourne, for the month, Sydney house prices up 0.8%. For the quarter, 3.5%. Year-on-year, 10.2%. Melbourne month-on-month, very strong, 2.3%. Quarterly up 5%. For the year-on-year, 9%. it can't keep going, can it?
No, and there's the talk of the bubble again, and,
That's exactly right.
and we get that every 6 months on the bubble. But Peter Switzer and I always point out there because he sits out there. Peter and I probably talked about the bubble every 6 months for the last 3 years, maybe even longer. It's been predicted for that long now, and I remember a lot of people actually sold their properties because they thought it's time to get out, and there were real estate gurus out there telling people, get out now while you can. And I don't know how many people sold their properties, and today will have lost the most gain they're going to get for a very, very long time. I think it's the interest rate impact, James. That's the thing, as I mentioned earlier, and I think if RBA is on again tomorrow, I just hope that there's no need for them to reduce the rates, because the last interest rate reductions have had a need due to economic circumstances. I just hope there's no need.
Because certainly, Jason, the expectation is they won't cut, but you speak to a lot of the big banks going into next year, they think there are further cuts to come. I mean, do you see that then having a natural flow-on effect to pricing amongst property?
Yeah, look, I think we see a lot of people with a lot of cheap mortgage money in their pocket, and you can see that in their buying behaviour. I think if the banks, lower interest rates again for whatever reason, then that has to have an income. Has to have an impact, I should say, on prices. That said, I think supply and demand equation is stronger than how much money or how much capital a home buyer or a property buyer has in their pocket. So, for example, if supply is still tight, which we're seeing a lot across Sydney, if supply remains tight, then I think that's going to have an impact on any house price growth rather than how much money someone has to spend.
In regards to the economy, I mean, obviously, if you're cutting rates, there must be an underlying concern about the outlook for the growth in the economy. So in that mind, I suppose their question, that one of the issues for them is debating whether to cut to promote the economy versus the stimulation and the heat that's putting in asset classes like property. I mean, your own thoughts as to what they should be doing in what they're saying?
Yeah, look, the drive is obviously external in this country. We have very little control at the end of the day, and I think there's talk about the US increasing interest rates now, which means Australia's going to become uncompetitive in certain areas. I just think that the one thing that will stop this craziness in terms of talk about a bubble, James, is the fact that if people's interest rates are so low right now, the only thing they have to fear is a job loss, because they can stay in the home forever with the interest rates being so low. So that'll put more pressure on the fact there's no stock coming into the marketplace. So people only get into trouble when they can't afford their properties. Now, in some parts of Australia, that's the case. Perth has been hit very, very strongly by this change. And I mentioned at the start there are people with negative equity there. They literally can't sell. Luckily for them, the interest rates are keeping them there. But if interest rate movement is upwards, there will be some damage, serious damage.
And just off the back of one or two rate hikes that could cause...
Correct, yeah, because we all seem to adjust, don't we, to our circumstances, and 1% is 25% increase.
So in the interim, because it would seem at the moment that a hike in rates is
unlikely,
some way away. What does that mean for pricing, do you think? I mean, surely we can't continue another year of double-digit growth in some of those key capital cities.
You would think not. You would think not. And we're in the danger zone in interest rates now. I mean, you go any lower, got nothing left. So we're in a very big danger zone. So something has to change at some point in time. And I think people need to be very, very wary. I hate saying this, but the reality is that it's not always a great time to buy real estate. Now, sometimes you've got to sit back. You said, Jason, earlier, sit back and just wait, because I think that time has arrived in most parts of the country. Not all, but in most parts of the country. There's a flow of stock coming in certain parts.
Are these sort of conversations and questions that you have from clients and prospective clients, either on the buy or the sell side?
Yeah, so they are. Look, someone's always got to go somewhere if they're selling, particularly if they're staying local. But buyers will come through our open homes, they'll ask us questions about the homes, and then often the next question, if they're not interested in that home, what else have you got? What else have you got? Lots of houses in that, we've got demand for some houses. We could sell them 5 and 6 times over.
Is that right?
Yeah, demand is really strong.
And you're seeing that reflected in you said auction's still the most popular form of sale. Still lots of people coming through the open houses and turning up to auctions?
Yep, we sold a house recently in Gordon on Sydney's North Shore. In the 3rd week of the campaign, We hadn't changed the price. We hadn't changed the marketing. We had 51 groups through in a 30-minute open house. So demand's strong.
And look, you touched on it before, but foreign buyers as still being strong. That's the case, and would you expect that to continue? And again, why? What do you think is driving that? Because certainly there's been lots of high-profile measures to try and, I suppose, even out the field.
Yep. Australia's a great place to live. Let's not forget why we live here and why we stay here. Great infrastructure, great health system compared to many other places in the world. Stable political climate, great schools. I think the long-term trend of we've got a free trade agreement with China. The doors are open. The business is open with Southeast Asia and Asia generally.
The security is fantastic. The banks are amongst the best in the world. So many. Everybody lives on the around the ocean somewhere. 90% of the population live on the coast. It's just climate is golf. Good golf weather. There you go, Jason.
Particularly on the North Shore, a lot of great golf courses.
Yeah.
Right. So you expect to continue that foreign buyer interest in the market?
Most of the foreign buyer interest in your area, Jason, is very strongly Asian influence, but most of the buying activity in Australia has been from the UK and the US. They're our two biggest buyers.
Forgotten, isn't it?
Yeah, they are two. China comes probably 5 or 6 down the list. The first two are switch between the UK and the US, and I would have no doubt they would still be pushing money into this direction.
I want to move to something different. Often the case when you see various industries doing as well as property's done, but that's new entrants. You know, this idea of disruptive entrants, flat fees, and various forms of sort of fee structures. What have you made of these guys, and how do they fit into the landscape?
They're not new. They're not new. This is the thing. There was a lot of press about this new process, but the flat fee process has been in Australia for a dozen years, if not more. There are still companies operating in Australia that do flat fee, and they haven't been that successful. And mainly because if you're thinking about marketing your property, you're not going to go with an agent that's offering you a flat fee. You're going to go with an agent that's going to offer you the best exposure to your property, because at the end of the day, a small incremental charge in fees is insignificant compared to the extra money you can get if your home is marketed effectively. And that's the danger zone. It's going to be a great place for complacent salespeople to go and live, because there's not much they have to do.
Almost out of time. I want to quickly get to a very important point, actually. The very iconic gold blazer, Century 21 blazer.
Thank you for mentioning that.
No, it's a great cause.
Part of it, actually.
It's turning pink.
Yeah, we turned pink, and I've been waiting for Mr. Gray to come back to put his pink jacket on for him. We all wear pink.
He'd love a pink pastel.
Dress up our offices pink. Our signage changes all around the place, and we do everything we can to raise money for Cancer Council. A lot of the offices contribute so much per transaction. There's all sorts of functions going on right across Australia and New Zealand in anticipation of attempting to raise over 200,000 in the next 4 weeks for Cancer Council.
That's a great initiative. Let's get to what's happening in the property market as we do each week. You've given us some of the slides.
Wonderful stats, yes.
Auction clearances to begin with.
Yeah, and that was I was saying a little earlier on when we were having a chat in the break. 77.5% was the clearance rate on an average for nationally. It was 69.6% this time last year, so still nearly 10 points better. But I'll tell you Sydney's 83.8, and I'll tell you Adelaide was 74.2. Melbourne's clearance rates, I don't know if this is a mistake, 92.8% clearance rate for Melbourne in the last week. Wow. I mean, they are the premier auction state. They've been that for a long time. So 92.8, when I saw the stat, it just really, I just thought, wow. I saw it earlier on today. So
that's extraordinary.
Crazy stuff.
Homes advertised for sales?
No good. Negative. Yeah, they're coming on in certain areas, but on average, across the nation, negative 0.67% and negative 1.3% for New Zealand. New Zealand had a good run in their stock. They've had a better market than we have for a lot longer, really interestingly. But we should be climbing in stock. We had a couple of weeks on, a couple of weeks off. We're off again.
Residential rent pricing?
Yeah, they're still steady, up 0.96% over this time last year when we started the chart. The worst performing capital city, unfortunately, was Darwin with negative 1.23% rent, followed by Perth with a negative 0.69%. The Sydney was the best at 0.7% increase.
And the last one, Charles, the residential vacancy rate?
Vacancy rates are still great. Melbourne is doing very well at 2.93%. Sydney is even better at 2.13%. But the worrying one is Perth. It has been for a while. It's been in the nines for the last 3 weeks, 9.44% vacancy rate, and with those three capital cities it's 4.83% average, but that means that almost 10% of the investment market in Perth does not have a tenant in there. That is, then that's the other part. We're talking about damaging people in terms. Lucky their interest rates are low because some of them can just hang on.
That's extraordinary. Look, gents, we've come to the end of the program. A big thank you as always. Charles Tarbey, Jason Roach, thanks very much. That is it for Property Empire for this evening. Thanks very much for watching.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.